Hello, welcome to Prosper with Purpose, where we talk about building wealth, managing our resources, and doing it all with intention and wisdom and within a biblical context. Today we're going to discuss a topic that's currently rattling through a lot of people, especially when the headlines start screaming and our investment portfolios go into the red. We're talking about stock market volatility. It's those ups and downs that make us question the prudence of investing and makes us question everything we thought we knew. So I'm here to provoke you to good works. Thanks for joining me. So here's the truth. Volatility is normal. In fact, it's part of the ride. And today I want to encourage you. We're going to talk about how to stay calm, keep your eyes on the long term, and why ignoring most headlines might just be one of the best investment decisions you ever make. And let's look at a few quotes from Morgan Housel. He said, "Volatility is the price of admission. The prize inside are superior long-term returns. You have to pay the price to get the returns. Many aren't." And again, he said, "It sounds trivial, but thinking of market volatility as a fee rather than a fine is a more important part of developing the kind of mindset that lets you stick around long enough for investing gains to work in your favor." So let's start with the basics. The stock market moves on a daily basis. It goes up, it goes down, and sometimes it goes sideways. Well, that's not a glitch. That's just how it works. If you zoom out on a chart of market performance over the decades, you'll see a consistent upward trend. But within that trend, countless dips, crashes, and recoveries. Even some of the strongest bull markets have had drops of 10%, 15%, even 20%. Well, the 2008 financial crisis, huge crash. But look at the recovery that followed. Similarly, with the pandemic in 2020, massive drops in March, and then a stunning recovery in the months that followed. So there's a quote from Benjamin Graham, the father of value investing, that says, "In the short term, the market is a voting machine. In the long term, it's a weighing machine." In other words, day-to-day prices reflect emotion, but over time they reflect value. Another way of putting that is, in the short term, markets are more of a popularity contest. But in the long term, they reflect the fundamental values of the underlying businesses. So now, let's talk about where the real danger lies in volatility. It's not in the volatility itself, and it's not even in the market, but it's in us. When we see the market drop, our brains automatically go into a survival mode. Fight or flight kicks in. It feels like something's wrong, and we want to act fast, usually by selling or hiding or pulling out altogether. But emotional decisions in investing usually lead to regret. There's a verse in Proverbs that says, "A person without self-control is like a city with broken down walls." And that applies to investing too. Without self-control, we're vulnerable to fear, to hype, to bad decisions, to sensational headlines. The best investors are not the ones who always pick the perfect stock or time the market just right. They're the ones who stay the course even when it's scary. Or maybe even especially when it's scary. They trust the process. They trust their plan, and they know that markets recover, even if it takes time. So let's take a minute to talk about the news. So if you've ever made an investment decision based on a headline, well, you're not alone. But let me challenge you. Most headlines are not written to help you invest. They're written to get you to click. If it bleeds, it leads, as the old quote says. That's the rule in media. Fear sells, drama sells. And so the media highlights every downturn, every bank failure, every bad earnings report, as if it's the end of the world. How many times have you seen a sensational headline, but then you read the story, and if you read with an intent to understand the issue behind it, you start to realize, well, it's not really as sensational as the headline would have led you to believe. So now I'm not saying to ignore the news completely, but you do need to look at it through a filter. Ask yourself, is this information useful, or is it just noise? And try setting boundaries. Limit your news intake. Turn off the talking heads. Focus on the data, not the drama. So here's what really makes the difference. It's a long-term mindset. So the market rewards patience. Time in the market beats timing the market every time. That's because of the power of compound growth. Your money working on your money year after year. But that growth takes time, and you have to give it room to work. And that means sticking to your plan even when it feels uncomfortable, even when everyone else is running for the exits. If you're not sure what your plan is, well, now's a good time to revisit it, articulate it, talk to a financial advisor, look at your goals, and make sure your investments match your timeline and your tolerance for risk. And when the market gets bumpy, go back to that plan. So here's the bottom line. Volatility is not the enemy. It's just part of the deal. Controlling your emotions is one of the most powerful investment tools you have. And headlines, they're usually more about attention than truth. There's a kind of peace that comes from knowing you're planted, not panicked. And that's what we want, to prosper with purpose, to make wise decisions, to stay the course, and trust that time and consistency will do their work. And I'm reminded of something that Warren Buffett's late co-chair Charlie Munger said during the financial crisis of 2008 when Berkshire Hathaway had taken a large drawdown. And he said, "This is the third time that Warren and I have seen our holdings in Berkshire go down by 50%. I think it's in the nature of long-term shareholding with the normal vicissitudes and worldly outcomes and in markets. In fact, you can argue that if you're not willing to react with equanimity to a market price decline of 50%, 2 or 3 times a century, you're not fit to be a common shareholder, and you deserve the mediocre result you're going to get." So remember, don't panic with the headlines. Demand your attention. Just turn them off. Stick to your plan. Stay consistent. And build up those walls around your emotions so that you can react with that equanimity.